One of the biggest myths out there about investing is that you need a lot of money to start. And the reality is that you don't, y'all. I started with $100. $100 consistently every single month. But I had the right mindset. I had the right knowledge. And I had someone that helped me to understand what investing was so that I can continue to grow that. And that's what I want to do for you, okay? We're not going to talk about the lies and the myths. That's on last week's video. We're going to talk about 4 truths that relate to stock market investing that I wish someone had told me sooner, because I wasted a lot of time feeling like I wasn't ready, and baby, I was ready. And you are likely more ready than you realize. And that's why we're going to talk about these 4 things that you need to know about investing so that you can make confident, knowledgeable decisions with your money and grow it with confidence. So if you're new here, hey girl, hey, or hey boy, hey. My name is Jocelyn, and I am the founder of Maximize Money, where I teach 9-to-5 working women how to invest in the stock market and grow their money with confidence, because building wealth, okay, is not just for the rich, old, and wealthy, okay? It is for the regular schmegular people like me and you, and it's for anybody at any income level. You don't have to have a lot of money, y'all. That's why I started with that. And so we're going to talk about the 4 things you do need to know about investing so that your mindset is right and your money is right and you're able to make confident decisions, okay? So the first is that, of course, we just mentioned, you do not need a lot of money, y'all. Thanks to compound interest, just investing $50 a month can add up over time, y'all. And I have a whole video of a compound interest calculator where I plug in a few different numbers. I'm going to pop that up on the screen because a lot of times we can talk about it, but I have to show you what those numbers can actually look like. So I'm going to pop that up on the screen. I'm going to show you what compound interest looks like in real time because, you know, men lie, women lie, numbers don't. Okay, so let's do this calculation. So SoFi is a popular bank. Yeah, it's a bank, and they have out of all the compound interest calculators I've seen, I really like this one the most. And we're gonna play around with some numbers. Okay, so let's say you have about $500 that you want to start investing in. We're gonna put that in, and then we're going to ignore these numbers right now. And then we have a monthly contribution that we're going to continue to add. That was the initial deposit that we put into a Roth IRA as an example. And then, we want to continue to contribute monthly. Let's say we're just going to do $100, And as I mentioned at some point in this video, the expected annual return for the stock market is historically between 7 and 10%. I'll show you what it looks like at 7%, and then I'll show you what it looks at 10%. If I'm honest, the last couple of years, it's been around 11 to 13, which is obviously good for us. If you're an investor, you want it to be as high as possible, okay? But let's see what it looks like at 7, and then we'll do it at 10, okay? So let's say we have about 10 years, that we want to leave this money alone and let it grow. We're going to leave it at 10 years here. And then the compound frequency, as I mentioned, we're thinking annually here. Are you earning compounding interest every single day, every single month? Yes. But it really depends on what kind of investments you have, what kind of, are you investing in the S&P 500 versus total stock? So it's just better to leave it at annual unless you're choosing something specific where it actually is better to, calculate this on a monthly perspective. But I think just holistically across the board, across all types of stocks, all types of markets that are being tracked, again, S&P, total stock, it just makes sense to leave it at frequency. So the good news for you is that all of these calculations are right below. So I'm going to include the link to this calculator. It is free on in the description. But this is what it'll look like for you. Assuming that it's a 7% return every single year at a $500 deposit, a monthly contribution of $100 every single month for the next 10 years. Your future balance will be a little over $17,000, and what you will have deposited by then is $12,000, which means the interest that you've earned is around $5,000, and that's not even including the growth associated with this account, you guys. There are growth stocks, there are dividends. Like, this is just based off the 7%, but there's so many other things that you might want to be able to consider, which is why it's always a good idea to have something consistent. Like, imagine if we didn't have this and it was just $0. Look at what you'd have. You've had little to nothing because your growth hasn't happened. The contribution stayed at 5. That went so further down. We're at 983 and we were just at, where were we? at 17. You know, granted, you contributed more, but $5,000 of doing nothing, and this is just $100. You're going to be increasing this over time. You're going to likely have bigger chunks to drop in to your investments. This is just assuming nothing else changes and it's only one account, okay? This is likely just maybe a Roth IRA, and you should be maxing that out anyway. So, yeah, that's that. So let's assume that it's 10% instead. We have this $500. You know, we're doing this monthly contribution for $100 for the next 10 years. Let's see what 10% will do for us. 10% will give you, you know, the deposit still 12,500. The initial was still there, and you contributing $100 every single month. You will have earned almost $8,000 for doing nothing, but contributing this $100 every single month, which you're likely going to want to increase over time. So that is the power of investing. Your money is growing, okay? Let's not even talk about those high wins where it may be 20% one year. It may be 15% one year, you know. Now, granted, I always like to just assume 7% because inflation. We've talked about inflation. Inflation is usually between 2 to 3%. So even if it is 10%, you're likely not going to see all that because the cost of goods and services are increasing. So I usually try to stay around the 7%. Or whatever the rate of return is for that year. I just automatically subtract 3%, just because inflation is something I have no control over. Now let's assume we had $1,000 instead. $1,000. You know, so then we do this monthly contribution at a 7% rate of return annually for 10 years. We will have contributed $13,000. The $1,000 deposit, we would have earned, you know, $5,500, and that would get you at $18,000 in the next 10 years. Okay, now let's see what it will look like at 10%. At 10%, $21,000. Okay, for doing nothing but giving this $100 every single month and riding the wave of the market, not touching it, not taking it out, setting it aside for 10 minutes, 10 years. That is the power of investing. And again, this is just a general, you know, thing. Like, there's going to be years where the market does super well. There's going to be years where it may tank a little, but it'll balance itself out and always stay around that 7 to 10% rank. So hopefully this was helpful. Please let me know if you have any questions. I'm going to include the link to this calculator in the description so you can play around with this yourself. And again, I'm all about education. Like, we have to learn these things. We have to do these things so we understand, excuse me, what we have to do to grow our money and not trade our time for it. So let's get back to the video. Okay, yeah. So as you can see, $50. I started with $100. I deposited $100 into my investment account that my investment advisor was managing, and I started probably in like 2018. I want to say I have around $26,000 in there right now at the time of this video, and I'll try to put up a screenshot so that you can see what it looks like. But like, that is a good chunk of that is just from the growth of the account. It's not me putting or increasing my investments. It's been $100 since then. It's still $100 since then, but it's consistent. I haven't missed a month, except for those months when I got laid off. Okay, I got laid off in 2020. But I hopped right back on the journey, okay? Because compounding interest has been my friend. It's been my friend. Compounding interest is your friend. It allows your money to grow while you're doing all the other things you want to do or you don't want to do. You may not want to be at work, but at least your money is growing while you're at work and you're not feeling pressured to go out and get another job and get more degrees and spend more money on stuff that doesn't even matter to your long-term goals. So you do not need a lot of money, okay, to start investing, but you do need the mindset. You do need a routine, and you do need to know what you're doing. You don't have to know every single thing about the stock market, but you need to know what your strategy is and feel confident enough to put that money aside for your future goals, which could be to make work optional, to travel more, like whatever that is, that has to matter more to you than the short-term wins that we're often inundated with, you know, online and off, okay? The second truth you need to know about investing in the stock market is that you do need to start now. Like I mentioned, I've talked to a lot of people, a lot of women who have like $50,000 in a savings account. They have, you know, a bunch of money in their checking account, and it's just sitting there. And I'm like, babes, you need to be investing, even if it's, again, $50, $100, because inflation is real, okay? And if you don't know what inflation is, it's essentially the rate at which goods and services like, our cell phones, food, all of those things, they increase year after year because of inflation. And usually the annual inflation is around 2 to 3% every single year. So you can expect things like food. Actually, I have some notes here. Food prices as of August 2025, and I noticed this too, child. My groceries have been more expensive. But anyway, the food prices inflation rate is 3.2% as of August 2025. Energy prices, that can be our gas, electricity, things like that, increase 0.2%. Used cars and trucks, and y'all know the car you probably could have bought back in 2021 for $15,000 is likely $20,000 right now. And the rate of inflation for used cars and trucks increased 6%, y'all. So what I'm trying to say is that our money is losing value by just leaving it in these regular schmegular accounts, these regular checking accounts, these regular savings accounts. So if you do have a big chunk and you're not ready to pull the plug just yet with investing, at least put your money in a high yield savings account, y'all. A high yield savings account operates similar to a regular savings account, but they pay you to save. And the interest rate, instead of you paying this additional 3.2% for food, let's say that's their interest rate, they pay you that on whatever balance is in your account. So I have a whole video on saving versus investing. I'll put that somewhere on the screen. But yes, you need to be investing your money. You need to be putting it into high yield savings accounts so that it can grow without you having to do anything for it to grow. Otherwise, you're losing money. Our money is losing value with every single year that passed. And that's why investing is a great avenue. It's a place to put your money in a shelter so that it keeps up with the rate of inflation, because usually the stock market is returning around 7 to 10% annually every year in returns. That's not a guarantee, okay? I say usually, and historically that's what's happening. So it's a great way for your money to not lose its value by just leaving it in these accounts, by just spending it all willy-nilly. Because the more you do that, the longer you're going to be working. And I know a lot of y'all are watching this right now and you don't want to work. You're likely at work right now watching this video. So if you want to shorten the amount of time that you work, if you want to have this hard-earned money that you're working for right now still be there in 5 to 10 years, you need to be investing it, okay? It don't matter what the amount is. You need to be doing it consistently, and you need to be knowledgeable about it, which is why you need to like, comment, and subscribe. Turn on the notification bell for this channel, because I'm going to break down the different investments out there, the different accounts that are out there, so that you're confidently making decisions with your money and not just covering your eyes and purchasing things because somebody told you to do it. That's why I'm not even giving y'all what to invest in yet, because we have to work on our mindset. We have to make sure our money is ready to start investing. Otherwise, you're going to feel every single hit of the stock market when it's fluctuating. And I know because I've been there, okay? So go ahead, like, comment, and subscribe to this channel. But again, keeping up with investing is one of the best ways to ensure that your money is growing at the rate of return it needs to, and it's not losing value. If you're just leaving it in your checking account, if you're just leaving it in your regular savings account, if you're just spending it on all these goods and services, you're going to be working forever. And I know you don't want that, babes. I know you don't want that. So make sure you locked in with me and I'll lock in with you. And again, if you really lock in, I guarantee you're going to be, the majority of y'all are going to be going investing within the next 90 days. You know, I'm telling you, because I've done it and I made all the mistakes so you don't have to, okay? We work too hard for that. Our money needs to be working for us. The third thing that you need to know about investing in the stock market is that I don't, and you don't, need to copy someone else's strategy, because your goals are not their goals. Your money is not your money. So your plan shouldn't be their plan. Like, let me give you all a little story time, okay? So back in 2020, we know it was a lot of scammers out here. The stocks were tanking. Everybody was saying to buy this. The stock split, the stock price split, all this stuff. I didn't know what the hell. I had an idea what it was, but I really didn't know. And so I just bought a bunch of stuff, you know, because Instagram said to buy it. I'm watching other people's videos. I'm consuming content, but I didn't really know what it meant. And so after all of those stock price splits happened, after the stuff just started tanking, I realized my portfolio was losing value. And I said, well, wait a minute. Y'all told me this was a good investment. No. And that's what I don't want you to do, because I guarantee you there's at least still 5 people out there telling you what they're investing in and online and not telling you why, and you're just going to go into an account and buy it. Don't do that, because number one, all investment accounts are not created equal, and number two, you don't know why they're investing in what they're investing in and what their true returns are. I want to give you the tools and the tips and the strategies and the knowledge to make the right investments based on your goals, your risk tolerance, the type of accounts that make sense for your lifestyle and what you have access to. Like, we are not covering our eyes and just picking investments anymore, babes. And if you've done that, that's fine. No shade. Again, I just told y'all I did that in 2020 and I didn't know what I didn't know, okay? And I ended up losing money and not understanding why, because I shouldn't have been investing in those things in the very beginning. If I'm interested in Netflix and Apple and Google, I could have purchased all of them for one at one price instead of individually purchasing them all and increasing my risk level. No, ma'am. We're going to move smart. We're going to move strategically, and we're going to invest with confidence, okay? So make sure you are locked into this video, locked into this channel, locked into the business of Maximize Money, okay? We're not doing that. I'm an educator. I'm going to educate you on what you need to do, why it matters, and you going to have the knowledge to choose the best decisions for you. But if you are like, okay, girl, you telling me this is coming, but I want to know now, where do I stand? Take my investor readiness quiz, y'all. It is a free 7 to 8 question quiz that will basically tell you where you stand as it relates to investing. A lot of people are ready and they don't know it. They have a lot of money. They have a lot of resources available. They have the stability. They just have been afraid to pull the plug. I have some personalized next steps for them. There's a lot of people who feel like, okay, I think I'm ready, but I don't know. Can you tell me? I'll tell you, and I'll give you some personalized advice. And then there's some people who are just like, girl, I'm at day 1. And I just want to get to day 2. I have resources for you as well. So instead of you just worrying and guessing, just take the quiz, y'all. It's free. I'm going to drop some gems based on where you are. Your personalized investment advice is going to land in your inbox, your email inbox. And then I'll have tons of other content based on where you are to support you getting from step 1 to step 2. And ultimately, again, at the end of the 90 days, and that's my goal for the majority of the people that watch this channel, like, I want you to be investing. And it don't need to be $1,000. It could be $100 every single month, and you know exactly what you're investing in. You know exactly the right accounts that are tax advantage, meaning that they're tax friendly to you and you're not paying on these investments that you're making. And that makes sense for you and your lifestyle and your goals, y'all. So that is linked in the description. I love it. I put my heart and soul into it, baby. I've written every single question, every single response, and all the content is handwritten by me, baby. I'm passionate about this, and I'm passionate about creating more women investors, especially my fellow 9-to-5 earning girlies. The last tip and the truth that you need to know about investing in the stock market is that you do need to educate yourself. Self-explanatory, y'all. I told y'all I made a lot of bad decisions in 2020 when it came to investing, but I'm sure there's other people who have considered even other stuff like crypto and NFTs and Bitcoins. And one rule that I have as it relates to investing is I don't invest in nothing I don't know. Nothing I don't understand, okay? I know that cryptocurrency and Bitcoin is another form of foreign exchange, okay? I still use dollars. I still use my credit card, my debit card. So I don't understand that stuff. I'm not going to invest in it, because the more I don't understand, the more likely I am to make bad decisions with it and feel some type of way when my portfolio is tanking, when I could have just stuck to Google, stuck to Apple, stuck to stuff that I understand. Please, y'all, there's no shortcut to this. That's why I said 90 days. I'm not telling you to go out and buy something on day 2. No, take your time, educate yourself, understand what your goals are, what your risk tolerance is, what makes sense to you, when you want to retire, when you want to get access to this money. All of that stuff matters. It's going to help you to make the right decisions. And I'm going to tell you how to read and how to research these stocks, because just because it's Apple don't mean it's a good investment for you, you know? So we're going to make all of that realistic, and I'm going to be here to support you, but we're going to start with the basics, okay? Over these next couple of weeks, we're going to start with the basics, y'all. So again, if you are eager to get started with just some personalized advice, take my free quiz, y'all, my free InvestHER, because this is a women's brand, okay? InvestHER readiness quiz. It is linked in the description. if that's the push that you need to just get clarity on where you are and where you're headed and get that clear next step, that personalized next step, it is available for you. And girl, I'm gonna get you together, okay? With love. I'm gonna get you together and I'm gonna share my stories that I can't share on this YouTube, okay? They're gonna be in your email inbox though. So again, my immediate next steps, because I'm here for actionable content, y'all, within the next 24 hours, and I want you to report back and comment below, is I want you to explore the compound interest calculator that I just showed on this video. That will be linked in the description. Just see what $50 can look like for you. Do the same thing that I did. If you need to scroll back up and see what my little tutorial was, just do it. Just get comfortable with seeing how your money can grow without you doing anything but putting it aside, okay? The second is to start some type of notes section in your phone or in your journal around investing. And I want you to commit to learning one thing about investing every single week. You know, now good for you. I release videos every single week on this channel. So it can come from me. It can come from any other amazing educator, financial educator. It can come from reading a book. Like if you need book recommendations, I've learned a lot from books. I've spent well over $1,000 on knowledge through courses, books, so that you don't have to. But if you want to, comment below. Let me know if you want me to recommend some good books. I have a whole bunch of them, y'all. And then lastly is, of course, take the quiz. Take the investor readiness quiz. It is free. It's linked in the description. It'll help you understand where you are on your investment journey and give you some personalized next steps so that you can get started and not let another year, decade, 5 years pass without you saying, I want to start investing. No, we're doing it. We're doing it, but we're starting with the basics so that you make the right decisions and you're clear exactly on what you're walking into. So that's it, y'all. And if you like this, and if you're like, okay, I think I'm ready, I don't know if I'm ready, that's okay, because in the next video, I will show you how to get your money ready. Even if you feel like your spending is out of whack, or you overspending, or you living paycheck to paycheck, doesn't matter. We're gonna get you from point A to point B, and that video is dropping next week. So make sure that you like, comment, share this video with a fellow 9-to-5 working girly, okay, who wants to start investing and is ready to start investing. And subscribe to the channel, baby. Turn your notifications on, because I'm bringing gems on gems, action every single week. We build on the things that we do every single week, so that, again, my goal is for the majority of you all that are watching this video to be investing within the next 90 days. That's my personal push for you, but you gotta want it for yourself. So thank you so much for watching. I'll see you guys on the next video. And if you like this video, if you haven't seen my video from last week about some of the lies that you've heard about investing in the stock market, I'm gonna make sure that I put this up on the screen, because it's a good one and we need to debunk a lot of these lies and myths that people are online telling y'all, okay? So thank you so much for watching, and I'll see you on the next video. Peace.